Hello, everybody. My name is Ty Bernicke, and I'm going to be doing the monthly market update for October. And for this month, I wanted to talk a little bit about inflation. As you can see by this chart, which goes all the way back to 1960, it shows the average inflation rate by year. Recently, the average inflation rate is running around 2.5%, which is pretty close to what the Federal Reserve's target is of 2% per year. So inflation has come down quite a bit from its recent peak. And if you look at the previous 40 years, you can see that we've, on average, had pretty low average inflation rates by year. There's been a few small peaks, but overall, we've enjoyed low inflation for close to 40 years prior to our recent peak. But if you go back to the 1980s, you can see that we had a few very high inflationary years where we actually were safely into the double digits. And when you look at what the Federal Reserve historically has done to try to dampen inflation, high inflation rates, is they tend to make it expensive to borrow money, which helps to cool down the economy. So the way they do that is by raising the interest rates. Back in 1980, the average 30-year mortgage rate was close to 13%. And at the peak during the 1980s, the average 30-year mortgage rate was close to 18%. So certainly we've had more trying times from an inflationary perspective back in the 1980s. But as I had said, we had a nice close to 40-year reprieve. The reason I think it's important to understand inflation and also important to understand the economy is because we're going through some pretty interesting times right now. If you look at historically what happens during times where the economy is good, historically speaking, the government tends to spend less because if they spend too much, that will tend to promote more inflation. They want to cool the economy down. Historically, during bad economic times, the government spending tends to go up to try to pull us out of a recession. And so historically, that's what's happened. But if you look at what is going on right now, we've had some pretty positive economic indicators recently from the perspective that the unemployment rate recently has actually gone down from consistently going higher. And recently it just went down to 4.1%, which is a very historically low level for the unemployment rate. In addition to the unemployment rate going down recently, we've also, if you look at these last few months, we've seen the number of jobs being added has been going up. Both of these items are positive economic indicators. Now, if you look at how this relates to the presidential candidates and what they have said that they want to do, and again, presidential candidates sometimes say they're going to do something, but do something very different, but both Harris and Trump have indicated that there is no sign of them wanting to slow spending down. And the reason I'm sharing this with you today is because I don't feel necessarily that we're out of the woods for high inflation going forward into the future. I think many people have seen the inflation rate come down and just assume that we're going to have low inflation for the foreseeable future. As that previous graph illustrated during the 1980s that I had on when we started this talk, we have peaks and valleys with inflation. Nobody, historically speaking, has been able to predict the average inflation rate with any degree of accuracy. And the reason that I'm bringing this up, I'm hearing more and more people talk about using investment strategies that are good during low inflationary times. In my opinion, it's impossible to predict inflation with any degree of accuracy, and therefore it makes it very difficult to predict interest rates and very difficult to predict which investments are going to do well or poorly going into the future. So for investing, obviously, we continue to recommend having a diversified portfolio. Don't get too caught up with the low inflation numbers that we've had recently because that can change quickly. And as always, if you do have any questions, please reach out to me or any of our financial advisors at the office, and I Hope I helped to shed some light on what's going on in the economy, what's going on with inflation, and what potentially could happen with interest rates as a result. Thank you for your time, and I hope you enjoyed October's monthly market update. Thank you.